Hello guys, welcome to a Train Parrot. The breakout that we saw on Wednesday on the 4-hour, that one that we took that was turning into a double bottom just like 1, 2, and 3 has continued going to the upside, just putting higher highs and higher lows. And we are entering such a critical timing, and I'm not necessarily talking about hitting potentially very shortly this 85k, which is just pending from a thread for the price to hit at any point in time. And I know that you are planning to enter in a short there. In this video, I'm gonna talk about the potential for price to carry on further beyond that 85k. What are the chances that this breakout on the 4-hour that has been successful, that has pretty much crossed all the range from RSI 20, now getting into the 60s, what if that was the beginning of a daily breakout? And not just that, guys, what if it was the beginning of a weekly breakout? And I want to keep the video free of hopium and all of that, so I'm going to look at all the technicals I currently have. We're going to assess in one hand the option of a rejection at 85 versus 85 holding and potentially getting us into that scenario of continuation to the upside. And I'm not kidding, this is serious critical timing. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And I know, usually I put around 3 videos a day, but yesterday was my birthday, so thanks so much for all the greetings, all the messages I have received. It was really cool, really awesome day. Today I was still slow to catch up on all the charts. Got a few things to sort out, but I'm back on the road, and I do not want to start welcoming my sponsor, Bluffing. You can open an account using the link down below. There's a 10% cashback if you open an account on this non-KYC exchange. You can win a Rolex, a Nintendo Switch, an iPhone 16, MacBook Pro M3, and a lot more. It's all depending on how much volume you trade. And yes, I am very interested in this pattern on Google Trend. Is retail coming back? What are they getting really bullish on? How early are we really? Is this too late? I think we are very early. If this was the beginning of something bigger, Google Trends is at 33 searches for Bitcoin. This cycle we haven't been beyond 66, so consider this 33 half of what we have done so far. It also calls my attention the shaping of the Google Trends at the moment, which as you can see is kind of a double bottom, and Bitcoin price on multiple timeframes, 4-hour, daily and weekly, is forming this sort of shape. Of course, it's not completed, but we are always 10 steps ahead of the rest of the retail, thanks to monitoring things like this and not overlooking them, but neither getting caught by fake outs, at least not on the weekly, sometimes on the 4-hour, I have to admit. And yes, many things, many pieces of the puzzle to get us out of this range are starting to take shape. We have had an intense period of bearishness with even potentially manipulation in the actual government, in the White House. Of course, nothing is confirmed. There's loads of speculation though about that. Bitcoin holds 82k as the US dollar falls to 3-year low and PPI inflation drops sharply. Bitwise doubles down on 200k Bitcoin price prediction amid trade tension. And it's very interesting to see so many people on one side getting bullish with this sort of bearish news for many others, which is the trade wars. And it's not just about the dollar index today, there's also new readings coming from the global M2, global liquidity, and you can see that after we spot this double bottom in here last year, before it formed, currently we are forming another double bottom around here, and we could consider this reading in here another breakout for continuation. And you have all these people that are saying that Bitcoin follows the M2. Yes, it does most of the time, but there's been multiple periods where it hasn't really mimicked it, not even closely. So yes, it's exciting to see that in the past 2 years, it's been really closely following the steps of the M2. And I think it's high likely that Bitcoin is gonna price in some of this liquidity. But remember that macroeconomy is something really complex, and there are some pauses and certain patterns there can be exceptions. So don't put all your eggs in the same basket, because if you drop the basket, you're gonna break all your eggs. And I found some people also doing the BTC divided by the VIX that we do a lot in my channel. I guess it wasn't just my original idea. I guess many people have done it in the past, thinking that will be silly. But you can see by doing this arithmetic, just BTC divided by VIX, we get 4 points of touch above this upwards sloping support. One was in deflation scare around 2015. Then we have the COVID crash, and then the Asia crash in Japan. I think that was last year in August. And now the tariffs. Coincidence? I don't know, but if this pattern plays out like the previous 3 times, where we got lucky to get a V recovery right after that, well, it will be really awesome. And trying to stay with our feet on the ground and not just buy the bullish news and the bullish statistics. Here we have Binance Exchange Reserve is plus 22,000 Bitcoin. This shows a strong acceleration in BTC inflows to Binance due to the macro uncertainty and before the upcoming CPI announcement. This was yesterday, just to note, but I wanted to show you. We're going to look into the Big Well Explorer to see if we can capture some of this. Remember, the number is 22,000 Bitcoin. Axel Adler, which is an analyst that I always follow on CryptoQuant. He's got some very nice dashboards there. Absolutely always worth having a look. And his name reminds me Guns N' Roses. It's kind of a mix between Axl Rose and Steven Adler. The average funding rate, 7-day moving average, is a stress indicator in a bull market. When the metric turns negative, red bars appear. It signals significant market tension. Traders are massively opening short positions and funding becomes negative. The only time that we had that in 2024 was right before exiting from the megaphone pattern. We are not there yet, but we were very close in one of these recent dips, about to cross the zero line. During the bear market, we spent pretty much all the time fluctuating into the negative, and in the early bull market, we were doing it still quite often. We could say every 4 to 6 months, we went into funding rate negatives, and that was signaling continuation. It is a great signal to monitor during bull markets. As you can see, every time you are in the red is one of the best buying areas, whereas in the bear market, not necessarily. And from Martin, we have another bullish signal. This was this morning, and it's a pretty substantial inflow of USDC into Coinbase. You can see all the inflows from before, and this one is a spike of 785 million. What is now causing noise pretty much every day, we get some noise from the White House. In this case, I don't know if this was a joke, really. I don't want to spread any sort of fake news or whatever, but I watched the video with trying to put a critic eye, but basically in the video they are discussing how much they made, and people are making it sound like they are bragging about the profits they made relative to this tweet saying this is the best time to buy, followed by the announcement of 90 days suspension of the tariffs. To be fully honest, if you ask me for my speculative thinking, I will say that definitely they do it all the time, and not just this administration, but all administrations in the world. There are no exceptions. I will probably bet on that. But what surprises me that it is absolutely obvious that they're being recorded with a phone. If you are there, you probably know someone is pointing at you with a phone, in which case, why would you be bragging about that? Because that's going to become viral, right? And there are laws about this. Anyways, I'll keep an eye on that. You never know how it can actually impact the markets if the shit hits the fan. We're also going to look later at the gold market. The rally continues, and I'm going to give you an update on that when we get to the last part of the video where we usually do general markets. There's also Trump signs first crypto bill, repeals the IRS DeFi rule, which is supposedly a great win for crypto, and it should be helping DeFi. CryptoQuant as well, their main account, published this chart that I find fascinating. These are two trading ranges, the one into mid-2024, and you can see how it became really quiet towards September, October, and November in this area. And that's pretty much all the altcoin season that we have had so far. If you look back in time, that period of quietness was around September and October when we were in Bitcoin season. Following that, we have all this impulsive move from October into January. I still remember running tons of bots during the period, and it was really good. Luckily, when I got into altcoin season, I decided to switch off the bots. I said, well, I still don't see much liquidity in the system, so I'm grateful I run all my bots all the way up, but as soon as I get to the top, bots switch off, at least the ones that are very aggressive, that trade pretty much any random coin that is doing well during the day. Actually, I made a mistake. I meant this area in here of end of October into December 2024. This one is from before, but it's the same point. And what we can see is that where we are is even quieter than the area that precedes that move up into what we could say is another altcoin season. So let's go with liquidity. Let's go with what's going on with the Fed at the moment. Here we can see RESVAL. This is the symbol for the balance sheet of the Federal Reserve. And the good news I have today is that we have a new high. It's not a significant one relative to the previous one, but at least we continue going in this direction where they are adding into their balance sheet after the double bottom into the breakout area in here. Nothing as substantial as this area, but I'm still paying attention because I think today there were some news where the Fed was stating that they are ready to step in if they need to help with the economy. And according to this chart, this confirms that, and it actually says they have already started being invested in the economy as we are. If they were scared, they wouldn't be doing this. And we also have the M2 pushing higher, which is now all part of the same package. The thing that I'm still annoyed that we don't see yet, you might be wondering what's going on with the alts. There is liquidity. Well, it's not just about the global liquidity. That global liquidity needs to enter the crypto ecosystem. And for that, we use this indicator. Let me know in the comments if you know one that is better than this, but this is the total crypto USD liquidity. It's just a delta, it's not a cumulative, so we can see week by week how much liquidity is entering into crypto. And all I can see in here is that liquidity is leaving crypto still. In all this period from April 2023, it increased around 350%. We have an increase from June into around September and another increase from October last year, and it peaked 16th of December. Right there when we enter that altcoin season that lasted like 10 days, it reduced 88% those deltas per week. And we are about to finish the week, and I think is the right time to look at CME. We can see that the fair value gap, the CME gap that we produced last weekend has been completely fulfilled. That happened on Wednesday. And it seems like price wants to go for the CME gap that we left open on Wednesday, 2nd of April. That is at the moment very close to the price, and CME is still open, but I think it's about to close. If not in 10 minutes, it should be like in an hour. If we want to close the gap of 85,400, CME market needs to be open to consider the gap filled. If it happened over the weekend, then it wouldn't count, because those orders that are pending there that couldn't get fulfilled, those imbalances don't get fulfilled with the market close, of course, even if the price on the 24/7 market on the blockchain still moves. There's something very interesting that I didn't notice before on the open interest aggregated. As you can see in this area in here from January into now, that everybody's placing this line. We started placing this line months ago, but now I go to Twitter and I feel annoyed because pretty much 8 out of 10 influencers already spotted the line and it became just too popular, which means that I don't like it as much as before. But there's something interesting in here that probably no one is seeing. If you notice, if we place the same trend line let's say from this top or from that top on the open interest, the point of contact in here is very far away. That means for the open interest really to break out to the upside, it needs to do a lot of catching up against the price. Price is already there pushing the resistance on the daily, but open interest isn't. It needs to push up around 16% further to go hand in hand with a price breakout. And what does that mean really? Well, in this breakout in here, open interest took the initiative before the price. In all this area, every single move was anticipated by following the open interest. It acted during the whole period as a leading indicator. We saw a higher low on the open interest. We saw the breakout before the price. And in all this area in here, there seems to be a lag. It's kind of the opposite. If price now broke out from here, my question will be, what is it going on with the open interest? Why doesn't it have motivation to be higher than the price? Is this divergence a sign that people really don't want to take the trade? I know in all this area there's been a huge deleverage scenario, but believe it or not, when people are really bullish and everybody is ready to reap the highs, open interest shows that. I'm just saying, in here it is not showing it yet. And in April, today, at this point in time, we are in the positive just by a millimetrical 0.23%, which is very small. So let's go with the 4-hour time frame and let's appreciate the potential breakout that's going on in here. We have had higher highs and higher lows. We have reclaimed the 47 level that we talk about. Something I missed yesterday while I was still celebrating. I was with one eye, sometimes checking my phone. Don't tell anybody. That is something that, I cannot control. But this rejection that we saw in here in 60s, when I took profits, I noticed that we went down around 6% and people were already saying, oh, this is the end. We are absolutely screwed. But I noticed that the retest was extremely bullish on the RSI. Why? Because we defend the same level of resistance. The neckline was 47. We broke out. We came back. We tested perfectly. 47 again. We didn't even need to go to 42 to test the ascending white line, which was the line that I left you in the morning during my birthday saying, hey guys, that's the line we need to defend. We need to defend 42. And we defended successfully 47. That was bullish. And that called for another attempt. And all this move up in here, there's something I want to tell you. All indicators, all statistics relative to what we have done, all this range coming down are really shouting to short the heck out of this. Why? Because it's the same range of values that has rejected the price every single time. And I'm starting to think if there is something different this time. And that is what I'm trying to chase today when I'm looking at the data. I am not thinking, oh, this is a gift, just the same setup. I'm just gonna go and blindly short it. If there is really a shift, if that dollar index coming back down, the liquidity pumping, the Federal Reserve pushing, things breaking, could potentially bring a rate cut or something that people have been waiting for very long, even if it's just a placebo kind of tradable situation, that could be just enough to push the price outside the breakout area, and then people start trading this, taking advantage of liquidating all the shorts. And just to be very clear, I'm not stating that I'm convinced yet. I'm looking at the data and I'm starting to open my mind and think maybe this time we can succeed in here. So on the 4-hour, let's look at what's our range, what levels we need to defend. We need to defend the 54, assuming that we get now a pullback in here. We should defend the 54. Last line in the sand is maybe to close something like this. We tend to do this kind of things on weekends. There is a tendency to produce some sort of breakdown during the weekend. So we could go a little bit beyond that. But I don't mind that much the breakdown. I want to see prices closing. How far can we get to the upside? And on the upside, we have now resistance at around 69. That is the green line that we have in here, currently priced at around 86.870. You can see that the level that we need to defend, the 54, is around 82,000. That has been support in all this area. We broke down, we produced a double bottom. This time in here, we came back down, rejected by the white line, and we couldn't hold it. If this time we see a pullback in here, what I want to see is the bulls defending 82. So we are going to look into the order book and see what's going on at 82. And let's go to the daily. On the daily, we got also a very critical situation. Let's appreciate that resistance that we haven't broken yet, but on the daily in intra-candle, we are above it. So if we close today like this, that is really bullish. It is bullish as well because what you see in here is an inverse head and shoulders on the RSI. You can see in there, you got left, right, and the head. And the target, if we measure the high of the inverse head and shoulders on the momentum, if it closes like this is pointing to around 64 RSI. Of course, if we see rejection in here, or if we get another fake out, important disclaimer, we already have a fake out in here, so this will be the second one. There can be up to 3-4 fake outs in a row. It's very typical to get at least one. So if we close like this, that target of 64, it's currently pointing at roughly 85. Sometimes it's 85, sometimes it's 94,500. Remember, it's a moving target. But on the daily, we have a sequence of tasks that we need to achieve. Of course, the first one is the breakout, the confirmation of the breakout above this level. Second is retesting from where we came from. Make sure that we are not going to see another ugly rejection like the one we saw on the 2nd of April. So let's assume we close there at 84, right there at resistance. Then we have the 200 daily moving average. That's an area that is an order block that has sold intensively 14K to the downside. So we do not want to get rejected again. But by that, then we have all these liquidations that are at 89. What I'm liking on the daily is these green volume candles, more than double the average. And every time that we are in one of them, we are in one of the double bottom daily candles. So that confirms that somewhere in here, there is a structure of demand. And thanks to that, we are attempting all these breakouts. We have that potential breakout confirmed by tonight. Then we're going to get low volume on the weekend. We'll see about that. Sometimes there is more volume. And then we got this potential bullish cross coming from below the zero line. On the MACD, we can see that the momentum has lasted very short in the red, not like this area in here that was very extended. On the weekly, if we close by Sunday like this, you take a picture of this and it's beautiful because we have all the range from 104,700 to 80.5K, and we lost that level with a weekly close. But I say, if we go to the 2 weekly and we cheat massively, we can say that we are building support in here at 8,500, right? I squash the 2 weeks into just one candle. So you can see how important it is to reclaim it, to challenge the bull market support band, to go to the middle of the range at 94, and then hopefully reclaim the 104,400. On the weekly, it doesn't look that great to lose that week, but you know, in lower time frames, I accept to lose a level if you still hang around there and you reclaim it right after. The caveat is not to take too long to do it. And what's going on with the weekly RSI? We can see the potential in here to form a double bottom pattern. And remember, we closed below the 44 that has been support since August 2023 in this bull market, and we lost that level. But now on the weekly, guys, this is huge. It's a double bottom formation that is closing potentially at 45. That 45 is three big things. Number one, testing the resistance of this lost support. So that is resistance. Testing the resistance of the dotted line that is downwards sloping right there at 49. 3, reclaiming the 44 that could turn into potentially the biggest bear trap ever. But here's the catch. We are closing against two weekly strong levels of resistance. We do have to break out in here, guys. If those two levels become resistance, the rejection is really ugly. So how can we play that really? Because there is this weekly annoying huge risk and the potential for the daily to do something. So when you trade on 3 different time frames, in this case weekly, daily, and 4-hour, this is what confuses most people. I've been saying we are in a downtrend on the weekly, and people ask me, but why are you trading along? Well, I'm trading along in the 4-hour, and they look at me like, what do you mean by that? Well, on the 4-hour, there's still room to the upside. I got all this range that I consider a safer range before I hit another tough level, and I can take profits from that. So if you want to know what levels are those, I think on the weekly, if we close Sunday, we could get a rally into 95, but not 95 is the black and white really between turning bullish on all the time frames. If we get just to 95, 4-hour can rally, daily can rally up until then, but weekly needs more than that. So that 49 or 50, if you want, it's at the moment priced at the 85K. And that's when I started the video, I say it's extremely critical what happens after we reach the liquidation of 85. That 85 seems like the best time to short. But if we close the weekly above 85, things could turn over and we could start a daily breakout that could run a little bit longer, that could turn into a weekly breakout. If we get like this on the weekly and we form a double pattern, voila, we go to the next range into a revenge rally that could last up until RSI 70, 72. In this case, that is priced around 126K. CPR at the moment is being challenged. The pivots are from 83,700 to 85,880, and you can see how the volume is now flipping into the upside. Let's see if we can cross those levels. And the SOPR is showing us that now, instead of people closing at panic, there is all this area in here where people are taking profits. So unfortunately for me, that is a no-go to enter now. We are getting very close to a level of 102 where people could take so many profits that can produce a decent pullback. A pullback potentially to get just a higher low. I'm not necessarily saying a sell-off that goes all the way to 50K, but you know, I prefer to time a little bit my entries, and yesterday it was a no trading day, so now I'm looking for opportunities to enter on a long or to enter in a short. The monthly is reclaiming support, as you can see in here. So if the month of April can hold the support, that is another big opportunity. Remember, we were preparing ourselves for losing that support and to have a revenge rally. But if we hold the support, what do we do when you hold the support? Well, we can get another rally into the highs. Hopefully this time, and here this is just wishful thinking, but imagine if thanks to holding this support at 60, we get for the first time one of these beautiful hills in green on the RSI that we haven't got yet on this cycle. Getting into 78, for example, will be phenomenal. That 78 is 147K. Thanks to the price going lower, the lower we went, the targets went from just 111, now they are pointing towards 146. Of course, that is subject that we don't enter with the general markets another leg down, which is also a possibility. And long-term holders, interestingly, they're not just holding flat, but there's been a little bit of accumulation in here. It's very small, but I love the fact that they are really not selling as the price goes lower. They're just going sideways. And finally, we got into Big Whale Explorer. We can see that it's still in this area of elevated deposits. So this confirms what they were saying about Binance, but the levels have been for multiple days of inflows that spike up to 20K, 19K, 11K, and I think today 10K more or less. But there's also some outflows to compensate for that. That's why we are not crossing the ratio of 1, which will be too much of a distribution from large holders. Spot ETF still on the way to the Head and Shoulders. I actually have to be very honest, I already see a Head and Shoulders in here. Liquidation levels. Well, we are approaching that 85. We know that if we get through that level and the price can continue rallying despite the lack of incentive to go beyond 86,700, if we can get to 89, then there is a lot of additional reward to get into the 90s for the first time. And that chunk here at the top is pretty significant. Below the price we have the 74, followed by the 60s that I think people already forgot, but looking at the big picture you can see that that 67 is not that far off from the price. And that I'm mentioning it just to remind you that we are testing the breakout. This is not a confirmed breakout. And let's say we take all this move like this, like that, just to quantify it. And if we place it like this, well, it could get very close to 70s just to get a range of what already happened and projecting it once again. But actually, we should do it with a Fibonacci retracement. An extension of 1 gets you into 70K, and an extension of golden pocket gets you all the way to 58. And that is just this move from the top of 95 to the bottom of 76, and then against the highs that we recently did around the 88,500. So it's totally within the range, doable. Therefore is a standing risk on our desk. You can also see it in here still appearing. Liquidation levels of the past 30 days, we can see that the highest at the moment is 89. Interestingly, it had a comeback. For a while 81 was the boss, but now 89 seems to be back on the table. 81 is now below us, so it's still there, but it's more like 82. Next on the table going up is 84,800. That should probably close that pending CME gap. And yes, here is the ugly part that has me a bit worried about the breakout. It's super exciting to see the potential breakout, but the things I don't like. Well, the longs have definitely rug pull in here. The last time they did this was on the 2nd of April and on the 24th of March. They went beyond 45 and lower in terms of percentages of global longs. That was one peak around 88. This one in here was the next peak at 88. And this that was 46 was another peak around the time I sold, slightly lower than that. And now we are at that level of 45. So I'm going to go back in time and I'm going to show you that during this bearishness, when we go into 45, as low as that, that is just enough for a dump, okay? All this period, all April into February, getting into a 45, it's kind of the end of the rally, if you want. There can be some additional upside, like in here, 4% more, then a shake off and then down. Where is the exception? Is this just a rule that always plays out? No, unfortunately, no. When we exit from the megaphone pattern in 2024, around October, we had periods where we were meeting 36, 35, 36, very low levels. Those levels were the levels where the pump was slowing down, but it still carry on going higher and higher. So what I want to say is in a period of bearishness, like where we've been all this time, 45 longs is really weak. You just dump it and you can go 10-15% down with another dump. But if this right now turn into an actual uptrend, that 45 won't stop the price going up. And I appreciate. Today I'm going slightly deeper into the rabbit hole, explaining how things work, and I'm not necessarily telling you something that you can consume, like buy, sell. No, in this channel, when there is not an obvious buy or sell, when I don't like the risk, I explain what's going on deeper, and I explain why it's more of a complex and critical situation. If you appreciate that, write it down in the comments. If this doesn't work for you, you can always go back to TikTok and find that dude that tells you, buy now, sell now. It's absolutely optional, but for some people it's not really that optional. What's going on with the ask? Well, we have some ask in here that has been enough to stop the price, and I'm really liking this shape in here. The areas that I definitely loved entering is the areas where we see an elevated bidding activity, meaning loads of limit orders below below the price. That is great to trade together with tons of longs entering with the price coming down. You know, that setup, I love it. But in here, this, which we could call a cap and handle, where the cap is actually a double bottom, it's a bullish pattern. But I honestly don't like seeing this 45 right there. I don't like seeing this 07 in ask, and this 540,000 of delta of liquidations affecting longs and entering into a weekend. That is not my setup. Can it break out? Can it take 85 tonight? Absolutely. It's totally doable. If you're still in a trade and you're convinced it can happen, do it. For me, it's a no-go to enter in these conditions. We have also in the order book, and here you can see all this wall of selling to get into 85,600. They really want to short that support at 79.78, and then we have an intense level with 37 million at 88.5. Let's look at what's going on in trading light, and you can see that I placed this line in here to show you where are we getting now with the amount of longs. We are getting into AK. This is longs delta. My area of value is in here, and we are exactly in the opposite. So another reason for me to not enter in here. I don't enter to things just because they could go higher. I enter in things when the edge is massive. It's obvious almost that it has to go higher. And in here you can see that there is a lot of orders that they want to take this and break out. In real time, you see 700 in here. There's 400 of resistance. So it's totally doable. But my risk in here is just too much. And targets, well, we have the fair value gap of 86,182. After that one is gone, then you have the vacuum, and that is again risk. If we manage to break out and we confirm these things, the push into 95, unfortunately, guys, could be really fast if it plays out. Market maker leaves everybody hanging. That is the problem. Fair value gaps below the price, we have this one at 83, we have one in between at 80, and then one at 78. I suspect, my finger in the air is that over the weekend we are going to take at least of the brown ones. Those skinny ones are very easy to take, at least the first and the second. General markets, let's have a look. Probably tomorrow's video is going to be a short one, so you can watch this over the weekend and get that overall view of what's going on. All right, DXY is big spotlight today, together with the dollar, together with the gold. You can see that the target of the breakdown of the head and shoulders, that rejection in here, was to get to the bottom in here, but we lost that level. We tested that and we called for continuation. Continuation to where? Well, statistics were saying 31 and we went to 30. So 1 point away from the statistics, which is pretty accurate. And we said that we were holding that resistance of 104. Watch my videos from a couple of weeks ago, and we were saying that we can easily go below the $100. We managed to get to 99. And this is history because many people are gonna compare it with what happened in April 2020, where the DXY made all this move in here that definitely helped with this leg of Bitcoin. Dollar going down helps Bitcoin, but we also know that things are a lot more complicated than that. We cannot just simplify it and say that Bitcoin just moves with what dollar index does. There are other aspects, and one of them is the gold. So what's next in here? Well, for the dollar right now, we will have to be looking for a breakout to the upside. But before we break out and we start looking for those, so on the dollar, I will probably be looking at some bottom information, very similar to what we had around September in 2024. But if there was some additional downside to be had that could mimic what we had in 2020, well, after this breakdown, it seems natural to look into that support at around 95, 96. That comes from this long-term support of connecting 2011 with 2020. And that gives us the equivalent view that we had when connecting 85 with the top of 2022 and considers fully this whole oscillation of the dollar that we are currently experiencing. My question is, if we get into 96, Are we still gonna stay within the symmetrical triangle and bounce back up into 105 at some point later? Or are we actually gonna see a dollar breaking down these levels and going way lower? The VIX has managed to put a huge range in here. This was this week, and we were calling for this breakout for months, and we are still in the territory of the breakout. We are still in a territory of elevated volatility and fear, just like we were in here in COVID. It's crazy to be talking now about the similarities against COVID, when in my previous videos, before we had 1 and 2, we were already looking for this, and eventually happened. On the other side of the VIX, we see some cool down, but it's definitely not as fast as this cool down that went from 73 back into 50. You can tell in here that that left only the wick of the candle, whereas in here now we have multiple long bodies of candles, which indicates that there could be still some continuation, some shaking around this area. And the people I follow on Twitter that I really do respect, analysts that have been analyzing the market for my whole lifetime, they've been calling for, of course, way worse scenarios after what's going on in here. Nasdaq pinched the previous lost support and is closing the week with a massive green candle, but it's not an engulfing one. The previous week was larger in body, in length, in any single way. So this green candle in here could be interpreted as a recipe for a rejection from 19,300, at least when it comes to interpretation from professional traders. I don't know, let me know your interpretation of this close. I don't have to go that far. I just look at the RSI in here, and after we lost the support, I consider this move back there just a dead body having some shakes in an episode of The Walking Dead. And even worse for the S&P. Look at this collapse, it's ridiculous. And the bounce is so insignificant relative to the whole fall. We got a fall of 35, 36 points, and the bounce is just as insignificant 10, 11. And I want to mention something as well that I want to share with you guys, and I want to hear your opinion as well. I started trading again on Bybit. I had a very long chat with someone that works on Bybit internal, and I asked tons of questions about how they've been handling the hack, what happened, what went wrong with the external company that handles the wallets, how they switch from one provider to another. So two things, I started using again Bybit as well for trading, and I'm gonna start promoting it again starting from today. But let me know in the comments what you think at the moment about Bybit. I think they're about to get a license as well to start offering services in Europe. There's going to be some sort of Bybit.eu. So I'm gonna bring back my link in the description for Bybit. This time there is a 500 position airdrop that you can use to trade any of these coins. You complete a task and you get your voucher for $500. You pick which coin you want to trade and you take the profits, as simple as that. Link is in the description. Thank you so much for watching. I'll see you in the next one. Bye bye.